CPI came in lower than expected. Expectations were 3.5%. It came in at 3.4%. Guys, inflation is done and over with. Just kidding. NASDAQ's up 1.5% all-time highs. Dow's up 0.8% all-time highs. S&P is up 1.1. Maybe Dow isn't up all-time highs, but S&P all-time highs. Guys, who cares about valuation? Who cares about anything? Inflation came in at 3.4%. Could any news be better than this? If you're new to this channel and if you like my sarcasm, if you like weekly 4 or 5 videos recapping what's going on in the economy, guys, subscribe to the channel. We have another video coming out later on today about the Fed's decision. What do you think the Fed is going to do today, Mo?
Well, the watch tool right now, I've never seen this before, actually. It's a 100% chance that they stay the same.
100% chance.
Wild to me because that's not something you typically see here, and you can see it on my screen. Let me go further on. I'm curious about this. Okay, so the next meeting, we did a video earlier this week, and you said, where is it a 10% chance or higher that they're going to change rates in the next meeting? It's July 31st.
So now it's become over. Before it was 8.8%.
Yeah, now it's 15.5%.
Now 15.5. Guys, I'm on Twitter. If you want to follow me on Twitter at EMPaulG. I'm very active. I have like 4,000 posts or something like that. I did a poll the other day. As cliche as this poll is, I'm interested to see what everyone has to say. How many rate cuts do you think we'll see between now and December 31st, 2025, which is 18 months from now? 0 was 23%. The winner was 1 or 2 cuts at 44%. 3 to 4 at 26%. 5 plus at 6.5%. Now, what would cause the Fed to decrease rates? They want to spur the economy. Why do you spur the economy? Do you spur the economy when unemployment is 3.8%, Mo? No. You spur the economy when there's a slowdown in the economy. Slowdown in the economy means probably less corporate profits, more jobs being lost, higher unemployment. Is that really what we want? Maybe it is. That's probably what it'll take. Did you see the letter that Elizabeth Warren wrote? I believe, I don't know if this is true or not, but I saw this letter.
I tend to not read anything that woman writes.
To Jerome Powell, encouraging him to cut rates and stop stifling the growth of the economy.
And that is why I don't read what she writes.
Well, you also think Trump got elected in 2020. So either way, Mo, we will not get into that right now. I'll just throw my thing. We had 245 votes. Guys, I look at this. Remember, back in December of 2023, the consensus was 6 or 7 rate cuts for the year. Guys, I don't know what's going to happen. No one knows what's going to happen. This thing is a cluster F. I look at the stocks going, how are we at these insanely high valuations? If you follow this channel, when I do a recap of the month or the week, I show my stock market to GDP ratio as well as the 10-year cyclically adjusted PE ratio, and we're over 100% overvaluation at this time. And if you believe that every investment is the present value of all future cash flow, if you believe that when you buy a stock, you're buying a piece of a business, this should concern you. Does that mean you stop investing? No, of course not. But what it means is get ready for some volatility. So Mo, why don't you go over some of the categories and what was driving inflation, what was dropping inflation, et cetera.
Okay, so I have some pink circles on my screen right now. So you can see food at home didn't change. And this is the month-to-month number. Then I'm going to go over the 12-month number. Gasoline down 3.6%. Transportation services down 0.5%. Now, if we look at the 12-month adjusted, food still up 2.1%,
which isn't bad.
Energy, meaning electric, utilities, et cetera, 4.7%.
Now, keep in mind, core CPI excludes food and energy because of how volatile they are.
Yeah.
So go ahead.
So used cars and trucks, this is a big one, down 9.3%.
Yeah, cars. It's funny. The car business has absolutely not collapsed, but the whole idea of waiting and paying premium. Mo just bought a very exclusive car that he bought for MSRP when literally a year and a half ago, you had to pay 50% over MSRP to get. Yeah. And Mo got it MSRP thanks to his good friend Paul. Right here, was at the dealership. The guy was trying to sell me on the car. I said, I know somebody who might want this car. And Mo bought it.
And then they did a really good job of delivering it, and it was the smoothest transaction I've ever done.
He's just joking.
Shelter up 5.4% still. Transportation services up 10.5% still.
Shelter up 5.4%. That includes rents, and we own 1,000 apartments, so we are happy to hear that. Sorry to our tenants.
So that's a little breakdown of the more in-depth numbers.
All right. So the market's the NASDAQ is staying steady at this 1.5%. Let's see what Jerome Powell says later this afternoon. That's all the more reason why you want to follow the channel so you can see his reaction and our reaction to what he talks about. That alone could drive markets down. Whenever he speaks, there's a lot of volatility. Yeah. Things can do. Just remember, we're here to teach a process, and that process is understanding that you're buying a business and understanding that business is going to grow over the next 5, 10, 15, 20 years. In the short run, we have no idea where stock's going to go. But if you pay a reasonable price for a stock, a reasonable price for that future cash flow, over long periods of time, your return on the stock will probably match the return that the underlying business creates. That's the big key here. And we also encourage people, pay more for good companies and for growing companies. Pay less for bad businesses. My personal belief is to avoid bad businesses and bad balance sheets. But there's a value to everything. Everybody has their own style. I'm going to show you my style. You're going to hopefully take bits and pieces of it and go implement it into your own life. That is my goal here. But when it comes to CPI, when it comes to inflation, guys, guess what? It doesn't matter in the long run. I know that might sound crazy, and everybody's always like, Paul, what do you think's going to, I have no idea, but in the long run, this stuff doesn't matter, and let me show you. This is the S&P going all the way back to the Korean War. These aren't even a list of all the crap that's happened in the S&P since then. And this is a logarithmic chart, which doesn't even show the true graph is this. That's the true graph. Look at all the things that have happened. And by the way, if you'd known every single one of these things were going to happen, you still would have done, you probably would have done better because you'd have sold here, bought here, sold here, bought here, sold here, bought here. And you'd have done a lot better. But you know what would have been easier? Just dollar cost average along the way. Dollar cost average along the way. You'd have done very well. If you'd bought, look at this, Microsoft. Microsoft right here, $52 a share. Right about here, $52 a share. Here, $4.20 a share. Why? The business grew from here, but overvaluation drove the stock prices. And you can experience that with overvaluation. What we're trying to teach you on this channel and on our main channel is to take a look at these things, not have it affect your day-to-day decisions, guys. I love when Warren Buffett says, if I had the Fed chair speaking in my ear, telling me his policy for the next year, I wouldn't change how I invest. I used to think that was crazy. Now I understand how brilliant that is. You want to find good businesses at good prices. CPI affects families and individuals, 100%. But how it affects your investing, it should not. If you're a dollar cost average person into low cost ETFs, you do it month in and month out. If you want to take a portion of your money and invest in individual companies, find good companies, buy them at good prices. If the prices fall because of Mr. Market in the short run and the fundamentals are the same, you buy more of it. That's what we're trying to teach here. But it's hard to do that because fear is big here. Fear is big here. Fear is big here. Fear is big here. Fear is big. And guess what? Every time fear was big, it was an opportunity. Every time things were euphoric, it was time to be cautious. Isn't that weird? Let me ask you a question right now. Is the market right now factoring a lot of fear or a lot of euphoria? Mo, what do you think?
Euphoria.
Guys, subscribe to the channel. We'll see you later this afternoon. Thank you very much for your time.